surging tensions between Israel and Iran sent tremors through the global markets. The first and clearest sign of heightened uncertainty was the surge in crude oil prices. Within hours, the prices of Brent crude, which had remained near $65 to the barrel for weeks, ratcheted higher. As of Saturday, the price was near $74 to the barrel. Higher crude prices mean higher fuel costs and an increase in the cost of freight. The potential negative ramifications for global trade resulted in a sharp fall in US equities too. Iran's airstrikes on Tel Aviv only served to heighten tensions further.
As far as global markets are concerned, one of the biggest impacts is going to be what happens with the oil market, not just Iran's production, but anything that they could strike around them as well. And so there's numerous factors to consider all at once here.
Oil-sensitive companies saw their share prices plunge. Meanwhile, defense-related stocks gained. Analysts say this latest conflict could well become larger, with the United States potentially being dragged in.
If you have a choke point, and that's what the Strait of Hormuz is and Persian Gulf, if you choke it and you can't get ships in or out of there, I know that the US have got battleships and they've got quite an extensive amount of naval ships in that area. So I'm sure that they're moving into that zone to keep it flowing. Now, if it was to get a choke point and you didn't get any movement, that's going to impact, and that would hyperdrive price very dramatically to the upside.
Back home, Indian markets dropped sharply but recovered on the back of strong buying by domestic institutions. Defense stocks continued their march higher. Experts anticipate the rise in global tensions to lead to near-term volatility. In fact, the volatility index, or the VIX, spiked nearly 8% in trade on Friday.
This geopolitical inflammation has been now going on for a while. I think it's now been almost 4 years since the Russia-Ukraine conflict started post-COVID. And something or the other keeps coming. I think this one looks a little more in terms of the ladder of escalation.
The latest global developments take the attention away from domestic factors like consumption, which is yet to pick up in urban areas. With that in mind, investors are turning cautious and are advocating selective buying in some pockets.
We have been calling out a flattish market mainly because we've been seeing what's happening on the earnings side, the fundamental side of our corporate earnings. There's not been much growth. The aggressive cuts taken by RBI, I think that was much needed by the economy. We need demand to pick up for things to start looking up. But normally these infusion of liquidity and cut in interest rates, they normally take a couple of quarters before they trickle into the consumption space. So hopefully things will start looking up from the festive season.
2025 so far has been a year filled with volatility, from geopolitical conflicts to tariff turmoil. And with no clarity on the direction of US President Donald Trump's trade policies, that uncertainty is set to continue. NDTV Bureau Report.